everybody. Welcome to the Home Buyers Clubhouse. For those of you guys who don't know me, my name is Jessie Lynn. I am a triangle realtor with A to Z Realty. Miss Erica, introduce yourself, sweetie.
Hey, I am Erica Batts. I am a loan officer with New American Funding.
Audience, how y'all doing today? Let us know how you feeling. This Feel Good Friday. Miss Nicole, introduce yourself, sweetie.
I am Nicole Crawford. I'm a realtor with Keller Williams Realty out of the Greensboro Triad area.
And again, hello everyone. Welcome to the Home Buyers Clubhouse. We go live every Wednesday and every Friday at 12:30 p.m. On Wednesdays, we give you something motivational, something inspirational, and on Fridays, we're dropping something educational. Y'all, today I had my Facebook friends come up with a title for our segment. It's National Home Ownership Month, and today we're talking about part two of the home buying process. Last week our topic was we outside. This week we're talking about Fetti and finances, y'all. I was like, what in the world is Fetti? I had to look it up.
Okay.
All right. So look, I said, y'all, I need some topics, I need some terms, I need something, right? So Rachel gave me bank. I said, bank? I said, oh, okay, I got it. We get in bank, right? Ashley, y'all know her. She's in the Home Buyers Clubhouse. It's been a while since we've seen her. We miss you,
Okay.
Ashley. We miss you. She gave me Fetti. I was like, what is a Fetti? So then Rashad turned around and gave me Fetti and finances, delivering the dough and creating cake. And I was like, okay, we got Fetti twice. So I looked up Fetti, y'all. Have y'all ever heard of Fetti besides Fetti Wap? Y'all ever heard of Fetti? Oh, I'm just old.
I haven't.
You haven't? What about you,
I'm
Nicole?
not.
You have not. So I looked it up. So Fetti is like short for confetti. So it's like money. So I guess like when you make it
Okay.
rain or whatever type thing. That's what Fetti means. So my audience, they didn't give me a lot of slang for money. So I tried to Google some stuff, right? And I didn't have much help. They gave me some old stuff or whatever. They gave me the buck, the bacon, the Benjamins, 100. And my hun is a hundred. It's from hip hop.
Okay.
It's $100.
Stacks.
Say what?
Them
Have I
stacks.
said it right? Huh?
I said we trying to get stacks. We trying to make paper. All that.
Right, paper.
We going
This is
after
this
the
is
bag.
American Express. This is what they're giving me. Mega bucks. I was like, what?
Oh Lord.
What you say? Stacks, paper, yeah,
Yeah.
all of that. All right, today, y'all, we're talking about getting somebody else money to buy your house. That's what today's topic is, and for short, that is what, Erica? When you
I'm
get
sorry.
somebody else money to buy a house, honey.
That's a mortgage.
That's a mortgage.
That
So
is a
that's what we're
mortgage.
talking about, y'all. It's a mortgage. How to get a mortgage. And again, our first step to buying a house was saving. And at the end of the month, we're going to go into deeper detail. We're going to talk about why you need to save. We talked about why you need to save, but we're going to get deeper in what you need to save for, if that makes sense. So, all right. So let's talk about getting this mortgage or whatever. So whenever you get a mortgage, what's the first thing you need to make sure that you do? I always tell my people to go into the bank or talk to, if you use your local lender, your bank, just go into the bank and say, hey, look, I would like to be pre-approved for a mortgage. It's that simple. Erica,
Yes.
no, let's go to Nicole first. Nicole, what do you tell your people?
It's the same thing. We need to get pre-approved for a mortgage before we can do anything.
Definitely. So, and a lot of people always ask, well, how can I get a mortgage? How can I get a mortgage? I usually send them about 5 lenders. They recommend that we do about 3. So they won't say, hey, look, you told me to go to this person or whatever. So yeah. So Erica, you are
Yes.
a lender.
I am a
You are
lender.
a mortgage lender. What are you seeing right now? How are things going before we get into this?
Things are still going pretty good. A lot of people, I will say, with the interest rates rising, they did knock some people out of the amounts that they were looking for. Um, so whereas before you pre-approved somebody for 300,000, well, now they can only get 275. So that's kind of the biggest thing. Interest rates
Mhm.
have gone up, but and a lot of people are alarmed about their interest rates going up. But you have to remember that basically things were on sale for the past 2 years.
Yep,
Now the
yep.
sale is over and we back to, where the rates were before that. And so a lot of people are like, oh my God, the interest rates are so high. But if you look like 10 years ago, interest rates was 6, 8%. So, we just, it's as, the money cycle does, it just kind of ebbs and flows. And so now we're just kind of back to normal.
Awesome. So we are back to normal, you guys. And today we're talking about Fetti and finances. We're talking about how to use somebody else's money to buy your house, which is called a mortgage. Unless you have $300,000 laying around, you can go out and, buy your house. But if you don't, you need a mortgage. You're going to need a mortgage, and we're going to talk about that. So, some of the things we're going to talk about some questions that you need to ask your lender whenever you go, when you visit a lender. Um, the first one is, and Erica, I kind of let you go over this for me, and Nicole kind of go, use our pointers as well. Be prepared. Be prepared. Know your credit score. Know your income. Actually, we can do this one, and then we'll let you do the other. Be prepared. Know your credit score and know your income. Have your pay stubs and your tax returns. So, I saw that the USDA, or it's the USDA or RD, they've changed a lot of their income limits and different things as well. So,
Mhm.
Erica, so is the credit score still 580, or what are we looking at right now?
Your minimum credit score is still 580. But what I do want to caution people about with the 580 is their guidelines, even though they tell you that that's what the minimum score is, their guidelines have kind of tightened up right now. Whereas it's harder to get approved at a 580. It's not impossible, but it is harder to get approved at 580 than it was, a year and a half ago. So
Awesome.
that's one of the things that you want to look at there. But that's definitely where we need to start is at least 580 as a score.
And last week we talked about this, about giving the minimum. If you're not at a
Mhm.
580 right now, don't aim for a 580. You should aim for higher. You should do aim for a 680, so you can reach that 580 or that 600 or higher than that. So don't aim for the minimum. Work towards getting to the next thing or
And then you
whatever. So,
also, sorry, well, you don't want to do just the 580 because,
mhm.
I have had instances where we get somebody, they have a 580, it takes them a little while to find a house. We got to pull credit again before you close on this loan. We pull credit again. Your credit is now at 578. You've done all this work and now you no longer qualify. And so, and we're going to closing in a couple of days. And now it's like, okay, your old credit report expired. So now we do have to pull credit again. And now you don't qualify because of a collection that popped up, whatever it is. But that's definitely, and I'm going to tell you, that's a difficult conversation to have with somebody.
Mhm. So, Nicole, have you had anybody? Have you ever had that happen?
Um, Normally we have called ours right before that
Mhm.
point and been able to kind of ask for an extension on the contract. I haven't had it happen in a long time because I really truly push for my clients to be higher, so we have a little bit of a safety net. Because I've
Yeah.
seen things happen. I've seen us get on the contract and that old cable bill that they forgot about hits that credit,
Right.
or something, or the Visa card goes over the limit and things like that. So it pulls down the credit score. So I really try to stay on top of with clients on what's going on with their credit and being upfront that if anything happens, let me know so we can handle it as soon as it happens instead of waiting for somebody else to discover it.
Definitely. Our Facebook user gave us a hug, you guys. I don't know who that is. Whoever you are, back at you. Make sure y'all, whenever y'all comment, click on the link at the top so we can see who you are. Thank you so much. We appreciate the love. All right, so let's talk about this credit thing real quick. And we're not gonna go in it because I did a live last night on credit. And if y'all want to do our lives, we do them at least once a month or whatever. So definitely, we're just gonna go over it very quickly how to build your credit score. So some quick tips is the first thing you want to do is check your credit report for errors. Just check it, just a quick rundown through your credit report. Check it for errors. Um, so you want to tackle in the derogatory items on there like collections and charge offs. Make your payments on time and bring your account balances below 30%. And we talk about this a lot, you guys. This is where that budgeting and that saving comes in. You need to start paying down those credit cards, pay them down. And we say 10%. So if you have $1,000 credit, credit limit is a limit, yeah, credit limit, you need to have that down to at least $100, no more than $100. So the next thing is you want to make sure that you keep your old cards, because the older your account history, it counts. And also make small purchases on your cards with zero balances and pay them off right away. Y'all got anything y'all want to come in? Because y'all know I go fast. Bad teacher. I'm a bad teacher.
It's okay. I will say a couple of things just on when you say make small purchases. Don't make new bills to try to build credit.
Woo.
So you don't have to go out and buy something else. You're
Hmm.
already paying bills every month. Put one of those on your credit card, whether it's your Netflix, whether it's your Hulu subscription, or whatever that is. You're already paying it. So don't make a new bill. Just put that Netflix on that card, and it charges that $8, $10, whatever that is on a monthly basis. So now you're just using that same money you were already using, but you just kind of just moving it around a little bit.
And look, I talked about that last night, and that's one thing, you guys. You want to make sure that when you're not, if you can't afford these credit cards, I know you're trying to build your credit as well. If you can't afford it, don't get them. Don't start adding stuff on your card to build your credit, and then you mess up your credit even more. And pay your bills on time. That's the biggest thing. Make sure you pay your bills. Don't get it and not, yeah, don't do it.
Well,
Well,
that's what I say. A lot of people are doing that. Well, like where they say, "Oh, okay, well, I'm trying to build credit, so let me go out
Mhm.
here and buy this TV, or let me go buy something else." No, that's a new bill. You already paying bills. Let me put
right.
my light bill on this credit card. So
And
that's
that's
Definitely.
what I
what
say is we get the credit cards and we want to go on a shopping spree. That's not what we asked you to get it for. And I think, especially with my clients, when we start advising them on credit, we never say go get a credit card to go out here and go shopping.
Mm-hmm.
It's to use, I mean, using it for the same thing that you're using it for every day makes more sense that because you already have the money to pay it off. But I see all of us, all of a sudden, we all have emergencies once we get that credit card,
Mm-hmm.
and it has to be used for something. And I'm like, you know what? What would you have done if you didn't have the card? Do the same thing now. Just use the card for what we asked you to use it for. And then once you get your house, even though we want you to keep your credit straight once you get your house, but then you have a little bit more flexibility to use it as you like. But while you're in the home buying process, sticking to the plan is important.
Definitely. We have a question from one of our Facebook users. Also, you guys, again, remember to click on the link at the top, but I think some people are not on that page, they're on my page, so that's
Mm-hmm.
my fault. But they have a question. How once your credit is pulled by a lender, is there a time frame it lasts when in the process of buying? Can y'all elaborate a little bit more?
No, I can
What's
I
the,
can answer that one.
you got that one?
So
Okay.
your credit report is going to be good for 90 days. So it's really good for 120, but you need to we need at least 30 days in order for you to be able to make the purchase. So you need 90 days is how long that's going to be good for. And that is from Graceful Wilson.
Awesome, awesome. Thank you. So they're asking, is there a time frame? So once they pull
Mhm.
it, okay, got you. Okay, 10-4. All right, that's a good question, you guys. All right, next thing, y'all got any more questions? Drop them in the box below. So, all right, right now we are on credit, and again, Erica, remind them of the minimum. She said, "Thank you." Remind them of the minimum, the score range, for the credit before we move on past that.
So the minimum credit score you can do to buy a house, or just or minimum credit score
To
is
buy
period.
your house,
To buy
580
a
to
house, it's going to be at least 580. Now there are going to be some exceptions. Like there are certain things that you can do as far as like maybe a VA loan. There's some VA loans that go down to 500, but there's generally you want to shoot for that 580, and that's going to be for your government financing. And then 620 is going to be your number for conventional financing.
That was my next question. So that's awesome. All right. So who want to take the next one? We just kind of talked about it, but y'all want to take it? Somebody want to read it? Can y'all read it?
Sure, to keep debts low.
Mm-hmm.
Okay. So, and that's just basically what she said. Keep your debts low, so that helps your credit score. Part of your credit score is determined by how much credit that you have available to spend. So, if you have 90% or more of your that's open, then it's like, oh, okay, this person uses credit responsibly.
Right. And that's your debt to income ratio. Some people don't understand what a debt to income ratio is. One of y'all want to break it down?
It's exactly what it says. Your debts versus like what you owe versus how much you bringing in.
And what's the goal?
So you generally want to be around 40%. And then, but your housing, they generally like to keep that around 25 to 29% of that debt. And that's your potential new housing payment because we have to calculate that in there as well. So that's one of the reasons why I know a lot of people are looking at, oh, it's going to be a housing crash. Well, these were not things that were in place before. And so that's part of the reason that it's not going to crash now because now you have to meet certain ratios. Because before, as long as you said you could pay, they was like, "Oh, okay, we'll sign right here. We're gonna give you a house."
Definitely. And for those of you guys who's coming in, we're talking about Fetti and finances. We're talking about using other people's money to buy a house. So yeah, and what that is, that's considered a mortgage whenever you use other people's money to buy a house. Most of the time it's considered a mortgage. Let's just say that. All right. So how can they calculate the debt to income ratio?
It's you're gonna put all your credit report bills, your minimum payments for those credit report bills, versus your income. What's the percentage of that? And now you're also going to include your potential housing payment as well.
All right. So Nicole, what are some questions that they can ask whenever they come in to speak with their lender whenever they go in?
Well, one of the big things that I think I always get as a realtor, even when we're talking about lenders, is what is the minimum credit score requirement? What down payment assistance programs do they have available? Are there any special in-house programs that they offer that may help the client? Um, I think knowing whether or not that lender is versed in the local programs,
Mhm.
if that person needs it, is a very important thing. Because some people don't work with all the programs that are available in whether it be city or state.
So what programs are you referring to?
When I'm talking about programs, I'm talking about like down payment assistance programs, and some lenders will have an in-house, what I call in-house, a program that's specifically designed for their particular firm or their mortgage company. That means that sometimes they'll do like 100% financing with no mortgage insurance and those type of programs because they're geared towards a certain clientele or a certain specific community or something like that. So it's just best to know, have those things, a list of things that you can ask when you're going in.
Definitely. So the market is slowing down right now. The market is
Mhm.
slowing down
Hmm.
right now. So things are looking up for all the people that was kind of struggling over the last few years to buy a house cuz I mean we could definitely see it slowing down. But what type of loans are you guys, and we see a lot of, and I hate to say this, but what type of loans right now could I say that's kind of winning in this market at the moment? Because we know we see in a lot of groups and in different places, and we kind of hear different stories. And as an agent, we see a lot of this. So, what loans are you guys recommending, and the different loan types out there that they should use or should ask for whenever they are? And I guess it's different for each person. It depends on your situation. But yeah, let's elaborate on the different types of loans out there, if y'all don't mind.
The different types of loans.
Mm-hmm.
So of course you have your government-backed loans, which is your FHA, your USDA, your VA, and then you also have your conventional financing.
Okay.
So those are just your different options. Um, But I will say most of the time, your lender will determine what type of loan fits your specific circumstance.
Okay.
I hear a lot of people coming in and they say, "Well, I want an FHA loan because I heard that this, I heard this, that, or the third about that loan, but that may
Mhm.
not be the actual best loan for you in that situation." So that's something that you need to discuss with your lender.
Okay, and that's definitely good. So what's an FHA loan?
A FHA loan is a government backed loan where they are guaranteeing that that lender will get
Mhm.
paid in the event that you default on that loan. So that's what the private mortgage insurance is for. But that allows you to, since it's less risk to the bank or
Mhm.
to whatever the lending institution, then they allow you to put a smaller amount down. So instead of the traditional 20%, you can put down 3.5%.
3.5% down. All right.
Mhm.
So let's talk about a USDA loan.
Mhm. So USDA is going to be your it's a rural loan, and it's made to help develop rural areas, or formerly rural areas. Like
Hmm.
if you looked 10 years ago, Nightdale, which is, if you're in the Raleigh area, Nightdale was a rural area. So they were doing USDA loans in order to help people buy in that area and build in that area.
And that's
And so
100% financing, no
it's
down payment.
100% financing. That is correct. You still have to have money, but it is 100% financing for the down payment piece of it. So then you only have to bring closing costs. There are income requirements with that. They have to count the income for every working person in your household. So even if you're the only person on the loan, but you have a spouse or a teenager that also may be working, all of that income has to be counted.
Awesome. So you got to count the children's money. That's
Yeah,
crazy.
there's money.
All right. So we talked about USDA, we talked about FHA. What other loans are out there?
So you also have VA loans. Those
Mhm.
are to our veterans, and if you've served, then most of the time you're eligible for this 0% down program. You have to get a certificate of eligibility, or I think it's a DD 214 from the VA, which says that, hey, yes, this person is eligible for a VA loan, and so that's also a 0% down program, and then you just have to come with the actual closing cost.
Awesome. And what is the last loan type?
Last loan type would be conventional. And
Hmm.
so that's the one where you would pay your private mortgage insurance. You can pay that. If you're a first time home buyer, you may be eligible for a 3% down option. Your traditional is going to be 5% down. You do have to pay PMI until it reaches 20%, till you pay 20% of the value of the home.
And Nicole, this question is for you. What's winning out here, girl? What's winning in this market, honey? What's winning?
Listen, we're still seeing the conventionals being first in what everybody really wants. Even though the market is slowing, we're slowly seeing our FHA buyers starting to win
Hmm.
more. I'm starting to see more of the VA buyers starting to be able to get back into the market. But the
Hmm.
thing about it is, like I tell my clients, we can only use what you qualify for. So if you can't do a conventional loan, you can't do one. We just have to make sure that all the rest of the terms make us more competitive than somebody else. So it just really depends. But really, we've been really seeing that conventional loan being the first thing that the sellers want.
But a good thing is I've seen some lenders kind of do the underwriting up front, which makes
Hmm.
it a little bit faster and a little bit more convenient for the client, and that could be something that they could use whenever they make that offer. So
Absolutely.
that's
That's one thing
another
I'm pushing.
question.
Yeah, that's
Yeah.
one thing I'm pushing for a lot of my clients is to go ahead and get us right, go get us through underwriting to be determined so that we can get out here and at least have that as leverage with our offer.
Yes.
Yeah,
And then that way you can do a quick close and we don't have to bite our nails the entire time. You are under contract and then it's like 45 days later and then it's boom, you can't buy the house.
right.
So,
Right. And I will say, just like Nicole was saying, talking about specialty programs, like I know that we have a program which will allow you to buy the house. So basically, we would buy the house in cash. They would then
mhm.
buy it from us. So then it doesn't matter if your loan is VA or FHA or conventional, because our offer is presented as a cash offer.
Hey, look, when this market was crazy and that's what we had to do. I had to use that program a few times for my clients when they had a VA loan and they had different loan types or whatever. That's what we did. Like, yo, this is a cash offer. Boom. And they won once or twice. So yes. All right. So we are almost done. So we've asked those questions. So be prepared whenever you go to your lender. Make sure you know your score. Keep your debts low because you don't want to get all the way to closing and then you can no longer afford the property. And ask questions. Ask questions. If you don't qualify for that property, I mean, for that loan, ask your lender, what are some things that I can work on in order to get approved? And that's what a lot of people that when they call me and they say, hey, Jesse, I want to get a mortgage, I want to get a house, I want to do this. I think the best person for you to talk to is the lender. That's what I say because
Mhm.
I'm not the one that's giving you the money. The lender can tell you, you need to work on this, fix this, pay this off, and we can approve you for this amount. Don't go by what your cousin did or what somebody else did because everybody's situation is different. This person may have more debt than you. This person may have less debt than you. And again, we talked about the debt to income ratio because that affects your loan type as well. Am I right, Erica?
Absolutely.
It does. Yep, different programs. You can only have there's a limit on what your debt to income ratio would can be. I will also say, when you're looking for a mortgage, check with multiple people because just because you didn't qualify at your bank does not mean that you won't qualify somewhere else. So, and then when you have multiple, you can get multiple credit pulls within that 14 days, as long as it's all for a mortgage. So you can go to different institutions and it doesn't affect your credit.
Boom. All right. So
And if
y'all
they
got
tell
that?
you no, and if they tell you no, please ask why. Please ask why. It's amazing how many people will call me back and they'll be like, "Well, they deny me," and I'm like, "Well, why?" Because even if you're shopping, at least you know to try to put yourself in a better situation with the next lender, because that way you know where to go. Certain lenders don't have, they all don't have the same requirements. So if
Mhm.
state employee says no, you know what to look, you know what to tell the next loan officer, because you may
Yes,
be able to tell them why they denied you, and they say, "Hey, we have the same requirement. There's no need in me pulling your credit."
And then,
definitely.
and then you can also talk to when you're talking to different people. So, for me, if I get a person that I can't qualify, but I know that they belong to State Employees Credit Union, I'll tell you to go over there and say, listen, this is where you need to go. And I feel like as a good loan officer, the goal should be getting this person in a house. So whatever information I can tell you in order to get that person in a house, then that for me that's what I'm doing.
That's awesome. I like that. So that's great. So yeah, you guys, it's okay to ask questions and it's okay to shop around because a lot of people what they do is they get denied and then they get discouraged.
Hmm.
Denied, then discouraged. No, don't do that. Keep going, keep moving, and keep pushing. All right, you guys. So that's it for today. You guys, Fetti and finances. Thank you, my Facebook
Yes.
friends, for coming up with this topic. It was awesome. Although, I learned something new today. I learned what Fetti is. Who knew? I thought it was a rapper. I'm old. But anyway, thank you guys for tuning in. For those of you guys who don't know me, my name is Jessie Lynn. I am a triangle realtor with A to Z Realty, and you can reach me at 919-818-9854. Miss Erica.
Hey, I am Erica Batts. I'm your loan officer with New American Funding. You can reach me at 919-608-7916.
And Nicole.
I am Nicole Crawford. I'm a realtor with Keller Williams Realty, service in the Greensboro Triad area, and I can be reached on my cell, which is 336-457-3007.
And you guys, you can reach all of us. I'm trying to find my overlay. You can reach all of us at the Home Buyers Clubhouse at www.thehomebuyers.clubhouse.com. Again, that's www.thehomebuyers.clubhouse.com. You can find us on Facebook, on our face in our Facebook group, and on our Facebook page, girl. We're gonna get this right. We're gonna get it. We're gonna get it. You can find us in our Facebook group and on our page at Home Buyers Clubhouse, and you can find us on YouTube at the Home Buyers Clubhouse. We hope you guys have a safe weekend. I hope you enjoy your day. You stay cool, and we'll talk to you guys later. Deuces.
Bye.